Friends, now uh, under income tax, we are going to learn few new concepts. Some basic concept I had already taught you. Now, let me share the screen with you again. Yeah, these are the concepts that we are going to learn. Now, we are going to understand what is the meaning of total income, what is the meaning of assessment year, previous year, assessment time, then what is the basic exemption limit. All these things we are going to learn with reference to assessment year 2022 and 23, year 22-23. Okay, so some of you might be aware that it is the total income which is chargeable to tax. And total income means, or how to compute total income. Prior to that, we need to compute something which is called as gross total income or GTI. Okay, so with reference to section 14 of the Income Tax Act, we can understand that there are 5 heads of income. Will you please read it? What are these 5 heads of income? They are called as 5 heads.
Yes, sir.
Yes, please.
First one, service. Do I read the sections, sir?
Yeah, you can read.
Yes, service. Section 15 to section 17. And second number one is income from house property. It's section 22 to section 27. Then third one is profits and gains of business or profession. Section 28 to section 44D. Then fourth one is capital gains. Section 45 to section 55A. Then fifth one is income from other sources. Section 56 to section 59.
Okay, so these are the 5 heads of income. That means entire income that we are earning can be grouped under these 5 heads: salary income, or income from house property, or property and gains of business or profits, or capital gains, or income from other sources. So under these heads, under different heads, we need to compute our income. And these sections prescribe the method of this computation. The how to compute salary income is explained in the section 15, 16, and 17. Similarly, how to compute income from house property, that is also explained. On a different head, it has been explained. So we'll be learning all of them subsequently. But mind you, or let me tell you one thing at this stage. If you compute income under these 5 heads, and if you aggregate it, still you are not going to get gross total income. 2 more adjustments are required to get gross total income or GTI. So what we will do, we'll be computing income under these 5 heads, find out total of that thing, and this total income will be subjected to these 2 adjustments. One is clubbing provision, and the second is setup of carry forwarded losses. Friends, we need to understand these 2 things: what is clubbing provision and what is setup of carry forwarded losses. Both are 2 separate chapters. So far as your syllabus is concerned, you'll be learning at appropriate time. But right now, you understand the clubbing provision means income of some other person is going to be clubbed with assessee's income. Not always, but in some specific situations. For example, in some situation, maybe minor child's income may get clubbed. Or maybe in some situation, you can say spouse income may get clubbed. So when you will be learning that clubbing provision, you can understand it. And there is a separate video on clubbing provisions in our channel. You can see that also if you want right now. But appropriate time, you can learn what is clubbing provision. Similarly, what is setup of carry forwarded losses? That means if earlier assessee has incurred some loss and he has filed return in time, then assessee is eligible to carry forward that loss, eligible to carry forward and set up that loss. For example, let us say previous year, or let us say some earlier years, assessee has incurred a loss of 20,000. And current year, he is having income of 60,000. So it is possible that the loss of 20,000 can be carried forward from that year and can be set up in this year. So consequently, current year income is 60,000 and this loss 20,000 can be set up. So effectively, assessee is going to pay tax on 40,000. This concept is called as carry forward and setup of loss. Are you getting the point? But subject to certain conditions. Okay, that setup and carry forward losses, there is also a separate video. You can refer to that if you want to understand it right now. Otherwise, in appropriate time, it will be explained. Do you understand?
Sir, if loss is high from the income, so what we will do in that case?
Balance can be further carried forward.
Okay.
Okay, suppose your loss is 60,000, income is 20,000. So 20,000 to the extent of 20,000 can be set up, balance 40,000 can be carried forward.
Yes, sir.
But always subject to certain conditions. Okay.
Yes, sir.
Right. So now I was explaining what is a gross total income. I told you 5 heads income under these 5 heads will be aggregated. Then 2 adjustments. One is clubbing provision. If it's applicable, that will be added. And then setup of carry forward losses. If some losses was carried forward, that can be set. Okay. After doing that, you will be getting the figure that will be called as gross total. Okay, that is gross total. But as you know earlier, it is not the gross total income, but the total income which is taxable. Now, how to convert this gross total income into total income? Now you can look at this slide to understand this. Okay, so total income is defined under section 2 clause 45. It means the total income or the total amount of income referred to in section 5 computed in the manner laid down in this act. And what is that manner? Manner is that first you need to arrive gross total income. Then allow some deductions. These deductions are popularly called as chapter 6A deductions. So section 80A to 80BB, but actually it is effectively, if you see, some of the sections are already abolished. So 80C to 80U. So after those deductions, or after this chapter 6A deductions, you'll be getting total income. And that income will be rounded up upwards to nearest to this 10. And that is the income which will be chargeable to tax, and tax will be computed on that income. Are you getting me?
Yes, sir.
Okay, so total income you have understood. Okay. Now look at this picture. It shows there are 5 heads of income, but under this head there might be multiple sources. For example, income from house property is one head, but you might be having 5 houses. So there are different sources. Let's say salary is one head, but one may earn salary from 2 sources. That 2 sources. Similarly, profit and gains from business or profession is one head of income. But one might be having 20 businesses. Those 20 businesses are different sources. So sources might be many, but there are only 5 heads of income. Is it clear to you?
Yes, sir.
Now, I told you from gross total income, there will be certain deductions. After the deduction only, you'll be getting total income. There are many deductions. You can refer to the chapter or section to find out what are the deductions. Here is only some examples. There are some deductions which related to some payments, like if life insurance premium is paid, or contributions are made to provident funds, or medical insurance premium is paid, or interest payment for educational loan, or interest payment for residential house, for loan taken for residential house. Then payment of interest for purchase of electric vehicles, or rent paid, like this, donations made. So if some of these payments are made, certain deductions are allowed. Then there are also some deductions on the basis of incomes. Let us say one assessee is employing new employees, or some income which relates to royalty income. So like this, some deductions are allowed. Okay. There are some deduction in with respect to some specific income. like interest and deposit of saving bank account. Up to a limit, it is exempted. So like this. And there are also some deductions with reference to specific type of assessees, like some deductions are allowed to people who are differently able. So after this deduction only, you will be getting total income, which will be chargeable to tax. Is it clear to you?
Yes, sir.
Okay. Now, if you look at this picture, this summarizes how total income is computed. You see, first, one more thing. This total income computation depends on residential status. Okay, so we need to understand what is residential status. That will be taught to you subsequently. Then the income can be classified under these 5 heads. You are aware of this. Okay, then compute income under each such head. Then apply clubbing provisions. They apply setup of carry forwarded losses. Then compute gross total income. Then deducts chapter 16 deductions. You'll be getting total income. And if that total income exceeds the maximum amount which is not chargeable to income tax, then assessee has to pay tax. These are the amounts up to which, if income is earned, it is not chargeable to tax. For example, if you see individual, HGF, AOP, BOI, AJP, the basic exemption limit is 2,50,000 rupees. If income is more than that, it will be chargeable to tax. For resident senior citizens whose age is above 60 years but below 80 years, the basic exemption limit is 3 lakh rupees. For super senior citizens whose age is above or equal to 80 years, the basic exemption limit is 5 lakh rupees. For all other assessees, there is no basic exemption limit. That means whatever they earn, they have to pay tax on it. Is it clear to you?
Yes, sir.
Okay. Now, up to this, we have understood today, right now, that if you recall, that in the beginning, what we have learned, that every person, who are persons, now we are knowing, whose total income. So we have, if you remember that sentence, we have remembered that every person whose total income of the previous year exceeds the maximum amount which is not chargeable to income tax is an assessee. So now you know what is how to compute total income, who are the persons. Now we'll see the definition of assessee. Who is an assessee? Just let me show you the slide. You can form some opinion. Next class, I'll be explaining you the meaning of assessee. Now you see. Who is an assessee? It is in fact explained in section 2, clause 7. Means a person by whom any tax or any other sum of money is payable. Okay, if some tax is payable or any other sum of money, that means maybe tax is not payable, but some interest is payable or penalty is payable, then also that person can be referred to as an assessee. And assessee includes every person in respect of whom any proceeding under the act has been taken. That means if some legal proceeding is going on or some income tax proceeding or income tax case is going on, okay, may not be relating to income tax, maybe some other related tax, let us say fringe benefit tax or assessment of loss, maybe assessment of reform. If some proceeding is going on, he is always an assessee. He is a person and some proceeding is going on, he is an assessee. And a person who is deemed to be an assessee, that means he is assessable in respect of some other person's income. For example, legal representative, agents, trustees, or guardian of a minor, they are not assessees themselves, but they are assessed or assessable in respect of some other person's income. So those deemed assessees are also assessees. Then third point, every person who is deemed to be an assessee in default, That means he has committed some default under income tax law. He might have paid tax, but he has failed to comply with some other requirements. For example, he has not filed income tax return, or he has not deducted tax at source. So Income Tax Act requires some compliances. If these compliances are not made, there is a default. A person who is committing a default is always an assessee. So now we have understood that if any tax is payable or any other sum of money is payable, he is an assessee. If any legal proceeding is going on in income tax department, that person is also an assessee. Deemed assessees are also assessees. And a person who is in default is also an assessee. Okay, so that is the meaning of assessee. Is it clear to you?
Yes, sir.
Okay, is it clear to you? Okay, fine. I think you have understood up to this. Any query you have after this?
Sir, please explain again the assessee.
Okay, you want to understand the meaning of assessee again.
Yes, sir.
Right. Have a look at the definition. This is the definition. Section 2, clause 7. Okay, it is again an exhaustive as well as inclusive definition. Means a person by whom any tax or any other sum of money is payable. That means if any tax is payable, suppose you have not paid any tax, it is payable, but you have not paid. You are an assessee. But let us say you have paid tax, but you have paid it late, and penalty is due, you have not paid penalty. So tax is paid, but interest and penalty is due. You are still an assessee. Okay. And assessee also includes persons in respect of whom any proceeding under the act is taken up. For example, let us say earlier you had filed a return and you have claimed some refund, and that proceeding is going on. That case is going on. Then you are still an assessee. Okay, tax is not due, but your refund proceeding is going on. Similarly, deemed assessee. Suppose you are assessable on behalf of your minor child, then you are a deemed assessee. Deemed assessees are also assessed. And let us say you have failed to comply with some of the provisions of the act. For example, you have paid your tax, but you have not filed income tax return. That means you have paid tax fine, but you have not complied with the other provisions of income tax law, like filing the return. So in that case, you are an assessee in default. You are also an assessee.
Yes, sir. Sir,
Okay.
if yes, sir, if a company or anything where we are working, if that company was deducting our TDS, but we are not going to file the income tax. So if there is any, that means that person is assessing, whose
Yes.
TDS deducted.
So if TDS tax has been deducted,
No, my
and
question
tax
is,
is payable by you. Okay, company has deducted tax, that's a different thing. But if tax is payable by you, you are supposed to file your income tax return. If you have not filed, then you are an assessee in default.
okay, sir. If deducted, that's necessary to file the income tax.
Yes. Is it clear up to this?
Yes, sir.
Thank you.